Story tonight, private home prices in Singapore fell across the board in the third quarter. That's according to the Urban Redevelopment Authority's latest flash estimates and marks the 12th consecutive quarter of decline.
Now, one analyst Channel News Asia spoke to says the magnitude of the decline was due somewhat to a change in URA's methodology.
The market situation has not really improved, and furthermore, the URA has also mentioned that they will be including the net prices of completed residential projects that were sold by the developers. And with this, with some of these transactions where the discounts and incentives have been stripped away, the actual net prices may actually be lower, and hence this will have an effect of dragging down the price index.
Overall, prices declined 1.5% quarter-on-quarter, the largest quarterly decline in almost 3 years. Home prices in the city were the hardest hit, declining 1.8%.
Prices in the city fringe areas and suburbs also fell. Meanwhile, resale HDB prices showed more stability in the third quarter, staying unchanged from the previous 3 months, according to flash estimates from the Housing Development Board. Now, looking ahead, HDB says it will offer about 5,000 new flats in Bedok, Bidadari, Kallang Whampoa and Punggol in its upcoming build-to-order exercise.
And for his insights into the latest data, we're joined now by Q32016, CEO of International Property Advisor. Thanks for joining us, Q32016.
Thank you.
Now, Q32016, so this quarter saw one of the biggest drops in recent years for private home prices. We saw how Nicholas attributed it possibly to that change in methodology by URA, including those discounts in net prices and all that. How does this, how much of that really do you think is part of the reason?
What Nicholas said is correct. There will be a small impact arising from the change in the methodology, but the total number of transactions that are attributable to that sort of adjustment is probably not as many as what we would possibly put to the 1.5% decrease. I think the index is sort of playing catch-up because on the ground for the last several quarters we've been feeling that the actual price drops might have been a little bit faster, and today finally we see that 1.5% per quarter, which annualizes to about 6% a year, is a little bit more reasonable. Specifically when we go into the details, landed properties dropping 2.2% a quarter, and that this set of numbers included that all segments had a drop rather than with one or two segments going up. But this set of data is a lot more logical and a lot closer to what we are seeing as property agents on the ground.
So, Q32016, what will be of interest to property watchers now, of course, will be whether this price index will stabilize in the short term or whether we're going to see, something more downside to come?
Yes, that's probably what people are expecting, but of course some of the recent new launches that have sold by the hundreds of units probably doesn't reflect so much of ground sentiment yet. And that's where the difficulties are. We are getting some sort of contradiction. On the one hand, we see there's a potential Brexit fallout coming up, that there are some fears in the financial markets about what happens to the US elections, what happens to the South China Sea issues. But then we still have cooling measures in place. Some people say that prices are dropping, we should remove the cooling measures. Yet, at some of the property launches, we are seeing pretty brisk sales. And then on the HDB front, we are seeing record high 900,000, $1 million transactions.
Because the speculation has been ongoing, really, hasn't it, in terms of just when the government will begin to ease those measures, if at all. Lots of speculation on that. There have been calls for it, property developers, right at the top of that list saying, let's begin those moves. What's it going to take for the government to actually move?
I think we are seeing a market that is sort of disjointed now, where you should be cooling the market for public housing, for example. Yet on the public housing front, where we had a 0% flat quarter-to-quarter price growth, but there again we are also seeing a split market. The poorer located HDB resale prices actually probably dropped somewhat, such as in Choa Chu Kang. But then we have seen also a few record high price sales in the more central parts or in the HDB flats that have just gone past their 5-year mark, especially in the DBSS segment. Now, for the government to take action, they actually would rather want to see across the board price decreases, but that hasn't happened yet. So I think we are in a sort of a catch-22 situation. However, what might tip the scales would be the macroeconomic factors, and if job losses as well as the external environment continues to weaken further, I think the government has to act soon.
Swee Yong, thank you for those insights. Appreciate having you here.
Thank you.
Speaking with us. We've been speaking with Swee Yong, CEO of International Property Advisor.